My goal for this video is to simplify trading as easy as I can for you. Understanding a chart is honestly really overwhelming. I was really overwhelmed when I first looked at a chart. It took me a lot of time to really understand what price was doing, because what am I looking at, honestly? Like, it's going upward, it's downward. How do I know it's going to go upward today? Is it going to go downward? Should I trade this? Should I trade another ticker? For this video specifically, I'm going to show you exactly my charting process, which I kind of dumb it down all the way. So as simple as I can. I don't have a bunch of monitors. I'm not looking at a bunch of data. I'm not doing a bunch of research on tickers. I'd rather just chart simply, have a couple levels, no indicators, and then just rely on the understanding of price action. So where are support resistance levels? Where is market structure? Is price in a certain area where I want to trade? And that will determine what my bias is every day. I wanted to go over this AMD ticker just because it's kind of moving in a regular way that a lot of tickers move. It creates all-time highs. We reject away. It has bigger pullbacks. It may chop around sideways. And so we have a lot of established levels to look at. And that's going to give us an understanding of, which one's more important? Is this one weaker? Is this one stronger? And based on all these levels and the understanding of structure, will we note where we want to trade for that day. So that's how we determine our daily bias. And sometimes, because there are so many important levels all the way back in time, they aren't as significant anymore. So they're not as strong. I like to focus on more of current price to tell me what are the more significant levels, because if it's a fresh zone, there's a higher chance of it reacting just because there's usually more orders pending in that area for institutions. Now, zooming in here, I'm just focusing on the 1 hour chart. Really, the 1 hour chart is just the best time frame in my opinion, just to understand what price is doing. And from here, you'll understand, is it bullish, bearish, or sideways? Those are the 3 categories that price is usually in. If you can determine which category price is in, so one of those 3 things, you can honestly learn like which areas you want to trade, and that will mean the difference between a higher probability setup, a lower one, and of course avoiding a lot of fake outs and losing trades. So here, what I'm seeing is that we have 2 really obvious support and resistance levels. We have, of course, one up here, that's a really strong level, and we have one down here. So the bigger, stronger levels are going to be areas where you see a really massive rejection. So it comes up to an area and then it creates a huge long trend. So comes all the way up here, takes a few days all the way to go down. Price came down here, went all the way up here. So really drastic movement. So those are the more important levels I see right now. But there will always be smaller levels in between. They may be a little weaker, but they're still significant levels to look for just because price has rejected them previously. The more times you see price reject a level, you just want to keep note of that level and then look for other confluences as you trade to see, hey, is there a trade direction away from it? Is there an entry and everything? So it's just more confluences in a trade are better. So it's kind of just, that's how you determine your edge. You see all these different clues that price tells you. All right, then you make the decision, do you want to leverage in a certain direction? What I'm seeing is that to me, price looks bullish for right now. Based on this overall structure, based on this rejection off of support resistance, I am seeing a early sign of bullish market structure, being that this is a low, this is a higher low, and then because we have made this swing high here, and price has kind of broken this high, what I'm seeing is that price is in this area, which could be an area price could retest and then go higher. Also, this swing high, just look to the left. If I'm looking all the way to the left, what I'm seeing is that this is actually an area of support resistance. So we have a rejection there, here. There's a lot of rejections. So based on these levels and the structure of this trend, I am seeing that, hey, the highest probability is to trade calls above this level just because it all aligns. Rejection off of support, bullish market structure, price is retesting this level, then you take calls. And this is where you would have your certain edge during the open. So this is the 1 hour time frame. If you are scalping, day trading, your entries are going to be, on the smaller time frame, and that's where you look for extra confirmation that price is actually going higher. So do you see a breakout of the high of day, pre-market high? Do you see a, fair value gap, a pullback, a candlestick pattern, all these different strategies you could use? If that move they are entering on aligns with the bigger time frame, you're essentially getting in on a smaller move based on the bigger move. So that's when you're entering with the bigger institutions, and that's what makes a much higher probability setup. So in this case, based on this overall analysis, this would be my bias. If price is breaking below this support level, it would mean that price is going down. And for all we know, price could honestly go choppy, because if it's rejecting off of this support resistance, faking out here, going down, to me, this would be a lower probability setup. I just don't like to trade against a established trend, or, I'm not sure, is this a change in trend? It could always be a change in trend. This is an example where personally, I would not trade. I would not trade puts here, even if price trends for the day. It could be the nicest, cleanest trend. It could have a certain entry that I would like to trade. However, it doesn't align with my overall understanding of price. So if it doesn't align, then my personal trading rule is to not trade in that direction. I'm not prepared for that direction. It doesn't align with everything. So say price goes bearish here, this could honestly be a little push that fizzles out. And because the bigger movement is upward, it could just push down here, you enter puts, only for price to stop there, and then it pushes back higher and continues the bullish trend. So a lot of times, like if you are seeing that, hey, I'm trading a certain direction, but as I enter, price just reverses really fast, or, I didn't get in the right direction, now I'm just gonna flip to the other direction and trade there. You don't always know whether price is actually gonna have a follow through. So what I like to do is to always make sure that I'm prepared in a certain direction and I only trade in that direction for that day. Any other movements, I don't trade it, because if I'm looking at a bunch of other tickers, I may be looking at 4 to 5 tickers that day. I only need one of them to show a setup. Maybe sometimes one of them goes in the completely different direction of what direction I want to trade, but then I'm looking at other tickers where price is in the direction I want it. It's aligning with the bigger picture. And so all I need to do is go to that ticker and look for the setup that I want. So it's just like a process of elimination. So this is just part of the process. Like, you analyze everything, you look at all the different structures, support, resistance. Do you want to only trade above support? Do I only want to trade above the high of day? All you're doing is waiting for price to get to the area you want, which is wherever the arrows are. And then you're just waiting for the setup, that strategy that you're using again and again. And then you wait for the entry and then you enter in that direction. And then the rest is like up to you and how you manage it. But this is what's going to make your trades much, much higher probability. Again, there's no 100% win rate for everything. It's about the time and place on when that strategy is best fitting. So based on this understanding of price, you don't have to make it super complicated. And then when you have a bunch of lines and everything, it can be more confusing to you. The more blank it is, honestly, it's easier to read. If you just follow the concept of strength and looking at where is strength, where is the buying happening, where is the selling happening, what are the chances of price retesting a level? All right, I'm only going to do calls above that level. I'm only going to look at a rejection away from it. I'm only going to trade if price moves out of a choppy period. So in summary, just make trading as simple as you can, because the simpler you have it, the simpler it is to read the price action.